Good evening, everybody. We're just going to wait a minute or two for people to log in, and then we'll get started. Thank you for attending. All right, well, I'll start talking at this point. It's 8:01. People will filter in. Good evening, everyone. Thank you for attending Financial Intelligence for the Pediatric Ophthalmologist, Pearls for Academic and Private Practice. My name is Darron Bacal. This webinar will be recorded and available on the AAPOS website. This is the second year the SEC has offered financial webinars, and both times we've had over 200 people register, which is fantastic. Tonight we have 5 excellent speakers who will each speak for 8 to 10 minutes. If you have any questions, you can put them in the chat, and we'll try to answer as many as we can at the end. Also, we would like people to tell us if any of these topics spark greater interest that you want us to do a deeper dive in the future, or if there are any other topics that we haven't touched on that you'd like us to have in a future webinar. And without further ado, here is Danielle to introduce the first speaker.
So I want to thank Austin Bach. He's the owner of the Abita Eye Group, also a clinical associate professor doing a residency program out of Abita Eye Group. And he's going to talk to us on loans and real estate, what to know and what to avoid.
Good evening, everybody. Austin Bach. I have a bunch of disclosures. None of them are relevant to this talk, so we're just going to get right into it. So the most important thing about getting real estate loans is preparing for it, because you're going to be very quickly asked for a lot of things. So to me, the most important things are going to be your banker and your accountant. So to make a, basically you start with a bank, open up all of your accounts, get everything, and then become friends with the business banker, because they're going to be the ones that hold your hands, and they're going to be the ones that tell you the tips and tricks about what's going on. When you're starting to look into real estate, the first thing you need to do is get your accountant on board, because if you haven't done loans with the banks and they haven't been getting stuff from you, they're going to ask you for 3 years of financials as well as 3 years of P&Ls, so that they're ready to say yes or no. The other thing is you need to know how much you're going to be able to draw and what you can afford. The only way to know that is to basically give those 3 years of financials and the P&Ls to the banker, and for them to basically say, okay, we can give you, for your real estate, we can give you $1 million, $2 million, $5 million. So that's how much you have, and that's how much you're going to be able to afford on a monthly basis. You're going to also need to know how much money you're going to need to build out whatever real estate it is. So do you have the cash on hand, or are you going to want to take a loan from the bank? And that goes kind of back to how much you're going to be able to draw from the different types of loans that you can take from the bank. So when you're looking at the real estate, before you put down any, P&L is profit and loss. When you're looking at the real estate, you should always have the contractor ready and basically bring him, her with you, and say, how much is it going to cost to build out what I need? And double that, at least double that. And then also you're going to want to do some interior decorating, which is not part of the contractor. This is usually separate from the real estate loan, and this you can do from a line of credit that you can get from the bank, completely separate from the real estate loan. So just a little bit about commercial banking. So there's 2 different types of loans. You have the commercial real estate and the commercial and industrial loans, and you need to know which ones your bank wants to be giving out, because different banks may choose that they only want to do CRE, and other ones basically say we have a lot of CRE and we want to do some commercial and industrial. So when it's commercial and industrial, which a lot of times is if you are an owner occupied unit, they're going to look at it as more of a commercial and industrial loan rather than a CRE, and they're going to like that better. And they're going to want to give you more money for that. So they see doctors as very good C&I opportunities because we're going to make money, and they know that we aren't going to have a business that's going to fold in 2 months. So when you talk to the bank, you're going to say this is going to be owner-owned real estate. It's not just that I'm renting it out. So owner-owned real estate for a bank is usually C&I. So next, choosing a property. No, you're good. So most important thing in real estate is location, location, location. So what you're looking for is we're discussing owner occupied tonight. So number one, you want to look at a place, how far is it from your current practice and who's nearby? So if you go 5, 10, 15 miles away, you have to know who's going to be there and are your patients going to follow you. Mostly with pediatric ophthalmology, there aren't that many of us around. So unless you're like in New York City or in a very big city, most of the people are going to follow you. I moved about 10 minutes away from my practice. I didn't lose a single patient. The next thing that you're going to look at is the size of the property big enough? My 2 offices that I moved into, by the time I moved into them, I was almost too big for them. So I ended up buying an adjacent property to one of them and expanded it an extra 1,000 square feet. So you don't want to look into, is it big enough for now, but you want to look of where am I going to be in 5 years, and is it going to be big enough for that? Do you want to buy an entire building? Do you want to buy multiple units? Do you want to buy multiple units together and then split them up and use part of it? And then you can use part of that to cover the costs of your own property while you're building up, and while you're paying back all of the other loans that you had to take out. You have to think about, do you want a unit in an office building? Do you want freestanding? Do you want access from the outside? Do you want them to have access from the inside? In Florida, a lot of times it's from the outside. You can keep on going, Danielle. So once again, choosing the property. Do you want to buy a practice with real estate, or do you want to just buy the real estate? Buying a practice is going to cost you a lot more money. Not necessarily important for us in pediatric ophthalmology. Are you going to want to build out a surgery center? So are you going to want a big enough place, or do you want to buy 2 places that are right next to each other so that you can have a surgery center right there? Other people talk about surgery centers. How much is a build out going to be? So is the place built out already that you're going to have to put minimum money into it? Or are you going to buy a shell? And I've done both of them. And a shell is going to be hundreds of thousands of dollars to build out. Zoning, very important. The first thing you need to do is, can I move in here and can I practice here? When you're going for permits for doctors may cost a lot more money than permits for other types of professions. And are you going to buy it and then the city say, or the county say, too bad, you can't move in here because you can't practice here. This isn't zoned medical. The other thing is inspections. All of this takes time. The permitting inspections takes time. Even though your contractor says they can finish in 6 months, if the permitting or the inspections add another year or 2, which they did for me once, it's terrible and you have to deal with it. Last thing is, if you're buying this, are you going to be able to sell it? The reason that you buy real estate is, number one, is basically, I don't want to pay rent. I want to pay mortgage, and then I want to get money out at the end. If it's in this place that's really not some place that people are going to want to buy from you afterwards, is it worth it to buy this place? So a letter of intent, that's the first thing that you're going to have to do. It's very different from buying your home. There is no pre-approval. You basically send in a letter of intent saying, I want to buy this for $2 million. So you need to know that you can get those $2 million out of the bank, but you don't need the bank to tell you you're approved. So that's something that you need to know. One of my properties, the guy I was buying it from was a mortgage guy. And I was like, can I just skip a realtor and you'll skip a realtor and we'll do this together? And we basically used ChatGPT to write a letter of intent and did everything that way. Going to save you up to like 6% on your purchase. So you can negotiate. Remember, everything's negotiable, especially if you're not using a realtor, because you're not going to have to pay the realtor. The seller pays the realtor. So the 1.5 to 3% on your side. And if they're not, you're good. And if they're not using a realtor also, you get an extra 1.5 to 3%. The loan approval process. So how does this go? Basically, talk to your banker. You're going to have your accountant send everything into them. They're going to have points. They're going to have all different types of fees and stuff like that. You negotiate with your own bank. You tell them, I don't want to pay this amount. They're going to say, you can keep on going, Danielle. They're going to say, this costs this, the basis points, the loan fees, everything like that. You have to put this percentage down. And I've negotiated percentages down. I've negotiated loan fees. I've negotiated basis points. They're just happy to get these loans out. So you tell your banker, please speak to whoever's above you and help me to get it. The terms of the loan, you have to see, what do you want to do? You want to do a straight 30-year, or you want to do a 10-10, 10-25, 25-10, different things, and they can give you different options. And you could sit with your banker and say, how much am I going to have to pay for each of these? Which one's the best for me? So those are negotiable things, fixed and variable, which we just discussed. Balloons at the end of 10, 20, 25 years. Really, the best thing is you'll sit down with your banker, and they usually in smaller banks or nicer bankers, they're going to tell you which one's the best for you and how it'll affect you differently, short-term and long-term. And I went fast. I only saw one comment from Lance. How much time do I have, Danielle? I don't even want to know how much time I have. So if there are no questions, or people can post questions in the chat and we can go to the next person so they can have some more time in case they need it.
All right, I just want to introduce Dr. Sorkin, Jeff Sorkin, a good friend to me, pediatric ophthalmologist up in the North Shore, Massachusetts, and a partner of Microsurgical Eye Consultants and Multi-Specialty Practice. And Jeff, I will start advancing your slides. You let me know if you need me to go faster.
All right, thank you very much. I want to thank everyone for the opportunity to speak with you tonight. As Danielle said, I am a single pediatric ophthalmologist within a multi-specialty ophthalmology group up in the North Shore of Boston. And as we're coming out of training as pediatric ophthalmologists, we have a choice of what type of practice we want to participate in, be it academic or private solo practice, pediatric ophthalmology practice, small group pediatric ophthalmology practice, or a multi-specialty ophthalmology group practice like I'm participating in. I've been in my practice for the past 20 years, and in my practice, we have 3 anterior segment surgeons, 1 glaucoma and anterior segment surgeon. We have 2 full-time optometrists, and we have several subspecialists that come out to our practice weekly. And we are in 1 large practice location with about 22 lanes. So I'm going to speak about the advantages for both the practice and also for the pediatric ophthalmologist of being in a group practice, and also some potential pitfalls and disadvantages. One real advantage is the ability for the group to offer comprehensive family eye care. And along with your regular pediatric referrals, which hopefully you'll have a large litany of, one way to generate extra patients within the practice is from children and grandchildren of adult patients, as well as any patients that have adult strabismus or a double vision will definitely find their way to your chair. And on the other side, our ability to send our older children and tweens and teens to optometrists for contact lens. And also older kids will graduate to the adult practitioners. So it's an excellent way to offer comprehensive care, and patients generally stay within the practice. Next slide. Some other advantages for the practice, being able to offer all age eye care enhances the reputation of the practice. And I think in our location, having the ability to see patients of all ages enhances our status within the community. Also, because our adult colleagues generally operate now at surgery centers, I have the opportunity to go to the local hospital to see our ROP patients, as well as operate there. And so it helps to maintain a link for our practice with the local hospitals, which in this day and age is good because we don't see our colleagues as much as we used to. Also, having the specialists within our practice limits need for subspecialty referrals out of the practice, helps to keep patients within the practice, and is definitely less disruptive to parents not having to go to other locations. Next slide. What are some of the advantages for the pediatric ophthalmologist? So for me, I have easy access to my colleagues to ask questions about patients that I'm having difficulty with in terms of either diagnosis or management. Perhaps the best benefit to me as a pediatric ophthalmologist is having vastly enhanced access to equipment beyond what might be available to me if I was in a single pediatric ophthalmology group or a small group practice. And I try to avail myself of the equipment to help with diagnosis and management of patients, and especially having things like B scans and axial lens for our myopia control clinics really make it much easier for me to manage patients within the practice. Next slide. Not that you don't have optometric services available in smaller groups, but having a large optometry practice within the clinic is very helpful, again, for contact lens referrals. But in addition to that, for the past year or two, I've been running a myopia control clinic, and the three of us see patients in a coordinated fashion to help manage them, figure out what the best strategy is moving forward and making appropriate clinical decisions for them. So in my practice, we have the ability to do both soft contact lenses and also ortho-K. So we have the full suite of options available for our patients. When I'm not in the office, if I'm in the OR or out of the office, we have a diplopia clinic that's run by the optometrist and the orthoptist, which helps to manage both stable and patients that are having difficulty maintaining orthotropia so that they fitted with prism and glasses and have orthoptic exercises in that clinic. And also having our optometry colleagues is very helpful for seeing follow-up patients or call patients to help decant some of my patients from a busy clinic. In addition, being present in a large multi-specialty ophthalmology group gives me access to staff members that have enhanced skills. So for instance, I'm fortunate enough to have an orthoptist, as I mentioned, but also we have a practice manager, we have an operations manager that helps me figure out where I am and where I need to be. I have a dedicated pediatric surgical coordinator and an ROP manager that helps to make sure that the patients are either seen in the hospital in a timely fashion or are seen appropriately within the clinic. Next. Also in our practice, we're fortunate enough to have a large optical shop with dedicated pediatric staff and pediatric frames. The staff understands the needs of kids and families, which is very helpful, and it acts as an extension of my practice with consistent messaging about issues of compliance, appropriate lens wear, patching, etc. Another really important and beneficial aspect of being in a group ophthalmology practice is enhancing the core ophthalmic knowledge as part of the mission of the AAO. So in our practice, we have twice monthly all provider conferences where we discuss interesting cases. We have M&M discussions where we talk about patients that are having difficulties or complications, and along with just day-to-day discussions about patients in our practice. What are some of the potential disadvantages of being in a multi-specialty ophthalmology practice? There has to be a willingness among the group to modify the physical structure of the practice to accommodate 20-foot lanes, separate waiting areas for kids, and child-friendly spaces. So in my office, this works best. My office is shaped like a large square, and I'm in the back corner of one of the back sections. And I have a separate waiting area for my patients, as well as some tables and video screens for them while they're dilating. But even having said that, when kids come to the office in the front part of the office, they're mixing with the adult patients, and that can obviously lead to some noise and distractions and be a bit of a distraction to the adult patients. I think most of us that work in an environment like this. The adult patients generally like seeing the kids. They don't get to see them in their other medical appointments. And as long as it's not overly disruptive, I think it can actually be additive to the practice. And then our adult colleagues have to be also willing to allow for the decreased efficiency, time efficiency, given the amount of time it takes per visit for us to see kids and have appropriate discussions with their parents. Next. Another area of potential difficulty is trying to manage cost allocations and fairly distributing costs and revenue in this kind of patient, this kind of group setting. And given the fact that most pediatric ophthalmologists, again, can't see as many patients per day and have disparities in insurance mixes, along with the decrease in surgical reimbursement that we've seen in the last few years, this can be a challenge. And what works best for us in our practice is having an appropriate balance between fixed and productivity-based formulas. And so in that situation, I am not overly burdened by being expected to pay for a large amount for a piece of equipment, for instance, that I don't use and can't generate revenue with. So this is something that you have to evolve into to make sure that it's fair for everybody. But I found that over time, if you get stuck with this, you try to lean on your practice consultants, such as accountants and legal representatives. And usually, if everybody is trying to get to the right solution, it can easily be achieved. And additionally, I think it's important for everybody to realize that a pediatric ophthalmologist brings benefits to the practice beyond just dollars, including some of the things that I mentioned before, but especially the ability for our parents and grandparents to, once they're familiar with the practice, to potentially be patients within the practice. And then, next slide. And then I'm always trying to be mindful of ways that we can use our unique skill sets as pediatric ophthalmologists to add value to the practice to increase revenue. And some of the ways that I feel like I've been able to achieve this is through the growing myopia control clinic that we have, and some of the other things that you see on this list, including the contact lens referrals. Danielle and I share an ROP contract with the local hospital. And so that's another way that I bring revenue into the practice. And I try to do everything I can in terms of referrals to the optical shop. I have patients that have keratoconus that go to the adult cornea specialist for cross-linking. And we've begun to use undilated exams when parents request that, increasingly using that as a relatively small but growing source of revenue. So I'd like to thank you for the opportunity to come to speak tonight, and I'm looking forward to answering any additional questions that you have in the chat session, or if we have time for the group chat session at the end. Thanks very much.
Thanks, Jeff. I wanted to introduce Dr. Bacal. He's the one who's organized our webinar tonight. He's the senior partner at his practice in Connecticut, and he's going to talk on the Specter of the financial spreadsheet.
Thank you, Danielle. You can go to the next slide. I'm a speaker for Cooper Vision, but that's not pertinent to this talk. Next slide. So when I was a kid, there was Family Feud. Richard Dawson was the host. It was a very popular game show. So this would be the top 5 reasons to not spend time on revenues and expenses. Number 1, I pay my employees to do this and I trust them. Number 2, I just don't have the time. 3, I'm not really interested. 4, I have no idea what I'm looking at. 5, my boss takes care of this. I don't need to know it. Next slide. So the first one, I pay my employees to do this. So the first thing you want to know is you want to have simple safeguards in your practice. So for example, the person that collects money doesn't post the money. So you want to limit opportunity for theft. And if you check in on them and they know you're looking at what they're doing, it reduces the theft. So for example, my bookkeeper gives me checks to sign every month. I know the vendors, I know they're correct, but I always ask her questions. Hey, who's this vendor? Who's that vendor? So she knows I'm looking. And just because you go to happy hour with your employees on Wednesday nights doesn't mean they're not going to steal from you. Now on this slide, so I start every day with spelling bee, Wordle, and connections from the New York Times. And that's very important to me. So we all make time for what's important. We're busy, but your finances have to be a part of your work time. And if you do this and you pay attention to your finances, you'll save money. And little by little over time, that money grows. And you may make a purchase or a vacation that you wouldn't have had otherwise. Or you may retire early. So it really has a value. Next slide. I don't know what I'm looking at. So when I was in medical school, a girl that I went to college with who was in the world of finance called me and asked me if I wanted to purchase some CDs. And I said, I really don't have time for music. I'm learning all this medical stuff. I hung up the phone. I'm like, wait a second. She wasn't talking about music. And I felt like a fool. And I realized I had to educate myself. So medical school does not prepare us for the world of finance. Also, as you get older, like me, learning new topics is good for your brain. So if you haven't spent time on finance, now's the time. And this stuff is not complicated. It's not the MCATs. It's easy for all of us to learn it. Next slide. Next comment is my boss handles this. So who really has your best interests at heart, you or your boss? Even if the boss is benign, they don't have your best interest. They have their own best interest. And it's natural for people not to make as much of an effort to be fair for other people. I have a friend who joined a practice and they discussed partnership for 20 years because it wasn't in the original contract, even though the guy was very nice. So if you show your boss that you know what's going on, it reduces the risk of being taken advantage of. Next slide. So some people don't even know where to begin. So you can ask other doctors that you know, hey, what about this? What about that? When you meet with your bankers, your accountants, your bookkeepers, you can pick their brains. There are plenty of online courses you can take for free or inexpensive, or you can really go all in. And I got an MBA a few years ago. You can get an executive healthcare MBA. Next slide. All right, now let's look at the actual data. So expenses. So you could look at expenses as rows and columns of data, and some people like that. Or you could look at like a pie graph, for example, like this. And this is going to go over with you. This is going to show you the health of your company. Okay. So for example, expenses. So like, for example, here you can have EMR and billing software, wages and benefits, taxes, things like that. And you can look at this as expenses as the numerator and revenue as the denominator. That's one way to look at the health of a practice. But remember, if the denominator is revenue, if your revenue went down this year, percentage-wise, your expenses are going to look higher, even though the absolute dollar amount may not be higher. You could also look at expenses year to year as total dollar amount or percentage. And keep in mind when you look at these things, timing. So for example, let's say your advertising budget went up $2,000 this year. But maybe last year you paid the bill January 2nd, so it didn't go into last year's dollars. But this year you paid it on December 30th, and it did go into this year's dollars. So you have to be aware of things like that. And when you look at this stuff, you can say, hey, my cleaning service went up 20%. That's not good. I'm going to put it out to bid with maybe 3 different vendors. Or, hey, maybe my text message appointment reminders for patients can be bundled with my EHR and I can get a savings. You can save thousands of dollars by looking at this data. Next slide. All right, so now we're going to look at a hypothetical practice. So this practice has 2 partners. Dr. X is the older doctor, Dr. Y is the younger doctor, and Dr. Newbie is not yet a partner. Next slide. So the first thing we're going to look at is assets. And these are financial spreadsheets that you're going to go over with your accountant. And you should, look at these and be familiar with them. So the older year, 2022, will be on the right. The newest year, 2023, will be on the left. So current assets would include checking, optical inventory, things like that. Fixed assets would be your long-term assets like furniture, equipment, things like that. And you're going to get a total number, a total dollar amount for your assets. You can go to the next slide. And that dollar amount for your assets has to equal this page, which is your liability and stockholder equity. So this is going to include your current liabilities, which is accrued expenses. These are your expenses you haven't paid for yet, and your loans payable. And then your long-term liabilities would be long-term loans payable. That would be added to your stockholder equity, which is the money retained in the practice, the retained earnings and the stock. And you add all that up, and that's going to equal the prior slide. So go to the next slide. So this is an important accounting principle. Assets have to equal shareholder equity and liabilities. Next slide. So now we're going to look at the revenues, expenses, the stuff that we really care about. And your accountant's going to bring this information to you, and you should know how to digest it. So first row is going to be your income, your fees for the year. So this practice went up $100,000 from 2022 to 2023. Then you look at their expenses, the direct expenses. These are tied to the revenue. So for example, contact lens purchases, yes, you pay, but you make money off of that. So it's a direct expense, or medical supplies that go into taking care of your patients. So for example, 2023, 20,000 and 480,000, and the percentages next to it are the percentages of expenses. So the total direct expenses would be 500,000. So you subtract that from the 3.1 million, and you get your gross profit for the year of 2.6 million. Then the operating expenses have to be taken off. That's the next slide we'll go over in a second. And you get your net income for the year for the practice, which in this case is $824,500. Next slide. So what are the operating expenses? Well, Dr. X and Dr. Y, the partners, take home biweekly paychecks, and those are their take-home pay every 2 weeks. Dr. Newbie is not a partner, so that doctor would be included in office payroll. That went up this year. You'd have to look why. Maybe Dr. Newbie wasn't a part of the practice the prior year. Office supplies went up quite a bit. So maybe that's a timing issue. Maybe that's a vendor issue. Then you look at your insurance, your rent, and your equipment leases. And you go to the next slide, and those are your operating expenses. And this would be the final, putting it all together. So Dr. X brings in $900,500, and Dr. Y brings in $880,000. So pretty close to even. Dr. X brings in a little bit more. And let's say this practice has 45% overhead. So you've got to take that off the top. Now, how are you going to allocate the money to each doctor? So if you do it even, everybody takes home the same thing. That sounds fair, but there's no incentive to work hard. On the other hand, you could do eat what you kill, but that's also somewhat not fair because I'm going to try to take the patient with the best insurance or whatever. So things like that. So most practices do a hybrid. So this practice does a hybrid of 1/3 shared allocation and 2/3 production allocation. In this practice, since both doctors bring in pretty similar money, it doesn't make that big of a difference. But like in my practice, there's a pretty large discrepancy between the top earner and the low earner. So it does make a difference, and it does incentivize people to work harder. So you get your subtotal, and then Dr. Newbie, after you pay his expenses for his salary and his travel or whatever, brought in $100,000 of profit. This practice chose to split that evenly, $50,000 to each doctor. But the optical profits are based on productivity. So Dr. X sold a lot more glasses than Dr. Y, so more money goes to Dr. X. So you get the total comp due to each doctor minus their base compensation, their biweekly payroll, and then you figure out the bonus for each doctor. So even though Dr. Y brought in less money, Dr. Y's take-home biweekly paycheck is less, so Dr. Y's bonus is going to be more, but that's going to even out and end the year. Next slide. There's a lot of information we can give you about this, but I just wanted to give you a brief overview of how to look at spreadsheets. These are my children. I thank them for their support, and my son is a CPA, which was my impetus for this talk. Thank you.
Thanks so much, Darren. That was excellent. I want to introduce Jasleen Singh. She has a practice. She's a solo practitioner at Mountain Eye Partners in Colorado, having prior been an associate professor at UC Denver. Thanks, Jasleen.
Hi, good evening, everyone. Today we'll be discussing the financial implications and considerations between academic and private practice in pediatric ophthalmology, as well as optimizing coding and billing for a successful practice. And again, I'm Jasleen Singh. I'm the founder and owner of Mountain Eye Partners and previous academician. So these are my financial interests. I am an ambassador for Modernizing Medicine. So pediatric ophthalmology, as we all know, is a specialized field focusing on eye conditions in children and includes a lot of conditions like strabismus or more complex conditions, if you choose to, such as congenital cataracts, glaucoma, etc. And we're primarily looking at two main options of academic or private practice. Certainly there's a spectrum between these choices, including hybrid models, hospital-owned practices, and private equity practices. For the purpose of this talk, I'm going to focus on a pure academic practice and a pure private practice. There are many aspects of these positions to consider, but we'll talk about the distinct financial considerations that can impact your trajectory. Starting with academia, we know salaries tend to be a little bit lower compared to private practice, typically ranging from 150 to 300, depending on the experience and location. However, academics does often have access to research opportunities and grants, which can supplement your income. Certainly, there are educational responsibilities, such as being a residency or medical student director, that may also come with supplemental income. One of the major benefits of academic practice is job security, especially if you're on a tenure track, which also comes with other institutional benefits like health insurance and retirement plans. On the other hand, with private practice, there's much higher earning potential. Pediatric ophthalmologists in private practice can make higher salaries up to 500 or more. However, it comes with greater financial risks. Certainly, one must consider your practice overhead expenses like rent, staff salaries, and equipment, and also aspects of managing a staff, such as dealing with human resources. And despite these costs, private practice does offer autonomy, meaning you can set your own schedule, and you can also have more control over patient care and work-life balance. In addition to income alone, there are other financial considerations, including the reimbursement models. In academia, you may have a stable salary with bonuses tied to patient care or research. Sometimes it can also have an incentivized bonus based on productivity. Whereas in private practice, you rely heavily on reimbursements from insurance, patient fees, and ancillary services, such as in your optical shop, products sold in your office, or equity in an ASC or your office real estate. Also, don't forget retirement planning. Academia might offer defined benefit plans, such as a 401k or a 403b. But in private practice, you need to set up your own retirement accounts, like a 401k or an IRA. Taxation is another consideration. Academic employees are W-2 earners and are subject to standard payroll taxes. Well, if you're a private practice owner, you might benefit from tax deductions related to your business expenses, but might face self-employment taxes or pass-through taxes. Now we're going to shift into optimizing coding and billing, which is critical in both practice settings. Accurate coding ensures that you get paid for the services that you provide. And in pediatric ophthalmologists, this can always be really tricky with rare conditions, age-specific diagnoses. So incorrect coding can delay reimbursements or even worse, an audit. So it's really important to perform regular audits to ensure compliance. You can also consider using an EHR with an integrated billing system to improve your accuracy and efficiency. So the optimizing coding and billing might differ a little bit between the two types of practice. In academia, you're typically on a salary, and coding might be handled by an institutional billing department. And certainly there's some revenue that you may have that come from grants, research, or education responsibilities. You may have less direct involvement in coding, but accuracy is still crucial to ensure proper reimbursement. In private practice, your income is directly linked to how accurately you code. You'll want to oversee coding for complex conditions and manage your billing process to maximize reimbursement and avoid claim denials, because we all know how much fun that is. So some challenges include limited control over billing errors in academia, while in private practice, there's always a risk of under and over coding that can lead to a lost revenue or even audits. And certainly in academic practice, collaboration with the billing team is crucial to ensure accurate coding of complex cases. You want to make sure that if they're changing your codes or reviewing your codes, that they're accurately doing so. In private practice, you want to stay updated on codes, training your staff to make sure that you're pulling in your revenue. And focusing on accurate coding can make sure that you have better financial success. Can we go to the last slide? The previous slide, sorry. So how do we next slide. So how do we optimize coding and billing? So you stay updated on your CPT codes and your ICD 10 codes is essential. You want to ensure that your staff is trained on how to bill if they're helping you with your billing or scribing for you. Make sure you understand your modifiers and you use them correctly, such as your modifier 25 for a procedure that's done the same day, or 59 if you're doing two distinct procedures, separate procedures. So understanding those are really key. You also want to consider outsourcing coding and billing or partnering with experts to ensure compliance to reduce or manage your denials. So in summary, both academic and private practice paths have their advantages. Academia certainly has stability, institutional support, research opportunities. Private practice typically provides higher income and greater autonomy. Either path, you want to master your billing and coding to ensure financial success. Implementing these strategies, such as staff training and consulting with billing experts, can make a significant impact on your profitability. Thank you very much. And I will answer any questions at the end of the webinar. Thank you.
Thanks, Jasleen. We're gonna finish with Dr. Siegel and then hopefully have some time to answer questions at the end. So I just wanted to introduce Lance Siegel, who's also in both private practice as well as academic medicine in Southern California. Thanks, Dr. Siegel.
Hi, thanks everyone for joining. I'm going to touch on a little bit everybody said and a few other little things. I think one of the most important things is, a lot of us are trying to build a practice or make a practice, but a lot of us are worker bees. And you really can't be a worker bee anymore. Sorry, guys. You kind of have to know what you're doing. What should you be making and have a little good idea of what you're going. Next slide. So I work at 2 different places, and you're welcome to call me and ask me questions afterwards. My email's on here. A lot of people for like ROP contracts in the past for coding and billing have reached out to me, and you can always reach out to me at either email. Next, I have no financial interests. I wish I did, but I don't, other than trying to make money and be home with my family. So some sample benchmarks that have come out in the past with the Socioeconomic Committee. These are some things you might want to be aware of. Average PEDS people see about 5,000 to 7,000 patients a year. That works out to about 5,000 to 7,000 RVUs, 9,000 for high production. Average payment for an RVU, or relative value unit, is 45 to 75. We're seeing about collections of $900K per year for a doctor, or that many average surgeries at 250. And overhead for PEDS is slightly higher. It's less sometimes in a group practice. And expected salary. So if you work at those numbers, people, you should be making about $350,000 a year. That would be a fair pay. If you're making less, let's see why. So what is your production formula? What is your incentives? What are your other sources of income? What is your ancillary service? Are you getting grants, endowments, bonuses, lectures, honorarium, stipends? You guys need to know this. So there's a whole bunch of models. I'm not going to go into the details, but if you're getting salary, is it fixed or sliding? Is it based on this AAPOS, I think it's called, as a typo, but ophthalmology has determined a salary for all the academic centers, which is fictitiously low. Are you doing production? Is it on your billed or is it on your collected? It's very important, because if you don't have a good billing service, you can bill a lot and collect nothing. If it's a group practice, they may be collecting a lot for their LASIK, but they may not have the time to follow up in your bilateral cataract or bilateral strabismus surgery. So you really need to know how much you're getting. Are you getting by RVU billed or RVU collected? Some places pay by patient touch. You get paid a lot for seeing a lot of your indigent clinic just by seeing the patients. And again, as most of us in private practice, based on CPT codes. And again, it's not just what you bill, it's what you collect. Okay, next slide. One thing I think is most important, and I've learned having now being one of your senior people, your geriatrics, is you really should have access to what you're doing. I mean, a lot of plans will say, oh yeah, you know, you can look at the books anytime. Oh, you're in academics, we take care of it. We have a billing, we have a coding. But really, you know, you should know what you're getting, what you're eating, what they're feeding you. So you should be able to know what you build and what your frequency is, what your carriers are paying you. If you're all seeing Medi-Cal in your clinic and they have a bad Medi-Cal rate, that's going to affect your bottom line. You know, how much did you bring in? What was your RVU production? What did you bill? What did you collect? And what this means is match collections. If you bill a sensory motor, did you get paid for it? If you build a refraction, you get paid for it. Most you'll be surprised that when you bill a refraction, you are not getting paid for it in a lot of places. Medicare pays nothing. So if you're on Medicare rates, you're going to get nothing for it. Even though you build it and you're in a group practice with adults, you may be getting nothing for it if you don't look on it. Next. So generating, a lot of us, if you do from E&M code, we have a lot of courses on at the Academy, on our meetings on building for E&M. And those are pretty much, you know, published, and they're pretty much out there of what you get for E&M rates. But again, you have to remember now, we're now billing on a different method. We're not billing on bullet points. We're billing on what is relevant to the exam. So you need to decide when you bill, again, are your diagnoses matching? If you use a 92014, a lot of plans won't pay it. That's an I code. If you're doing an IE&M code and you deal myopia, they may not pay because it's a refractive diagnosis. If you do a lot of insurance, if you do a Q code, which is like pseudoesotropia, they won't pay. In the state of California, if we don't use a phoria diagnosis, they won't pay for our sensory motor exams. You have to have a strabismus code. So each of these billers, you should know this by looking at your match collections. Are you getting paid? Nonetheless, if you take an overhead, you take in your rent or whatever your apartment's paying or whatever, you should never be getting less than 30% of your collections. So you should be able to look at the end of the year and say, I made for the department $1 million. You should get 30% of that. That's fair overhead. That's your amount. And same based on your RVUs. So that's for your CPT and E&M codes based on collections. So by RVU, you should know that every single thing you do has an RVU code, a refraction, a sensory motor exam, an E&M or an I code or a vision code. So at the end of the day, when you do your services, you'll have a total amount of RVUs. The RVUs are added in along with production factors, which I'll show you the form at the end that tells you how much you should be getting for a total collection. So even if your department is making a ton of money or whatever they're getting, your RVUs is for your work unit. And your work unit right now is $32.75 per unit. So that's your work unit. So if you took your RVUs at the end of the year and multiplied it by 32.75, you should never be paid less than that. That's just for your work. That's not for your malpractice insurance. That's not for what they're making for the facility fee. That is your amount. And so no one should ever be paying you less than $30 per unit. And certainly most are paying $45 to $75 per unit. Go on. So your reference, if you want to look more about how you can make more for your RVU, if you're paid by an RVU unit, you can treat more patients, perform more procedures, treat patients with higher medical acuity, provide more complex care, and learning you're optimizing your code. For example, if you're getting RVU payment and you do an excisional biopsy, that's only 4.2 RVUs. But that same thing, if it's on the orbit for a dermoid and you bill for an anterior orbitotomy, which is probably the better code, that's 10.3 RVUs. You're getting more than 2.5 times about what you'd be getting for doing the same procedure. So if you don't know your RVUs and what you're billing for them, certain cataract surgeries, it turns out so many adults are doing complex cataract surgery, you get less RVUs for doing that than billing for a regular cataract doing just a lens, like a fake, not even a phaco, it's called a lens aspiration. And again, try to get your level 4s, you get more for that than level 3s by doing your RVUs. Next. So again, if you take my two examples and you say, if I saw 6,500 patients a year and generate 9,000 with 60% overhead, your salary would be $360,000 a year. If you're at a hospital and you did 7,500 RVUs at $50 an RVU, which is pretty much standard, you'd make $350,000 a year. So again, it's real hard to be a full-time peds ophthalmologist seeing number of patients without making $350,000 a year. That's kind of your amount now. Just for starting. Next. So problems for earning. Again, I'm not going to go through all the details, but based on what you billed or what you collected? Does your contract reimburse you for other things like refractions? Are your codes preset? Sometimes you'll find you're capitated. Your department has agreed that you're going to see all this Medi-Cal contract for $1,000 a month, and you don't even know that. And remember, RVUs can change. I was shocked when I put this talk together that vertical muscles now pay the same in RVUs as horizontal. Somehow the AO and all these RUC and all these things have decided that verticals pay the same. So it takes a lot more to do verticals, I think, and they're a lot harder, but they pay the same. So other things you have to always remember that if you're in a practice and one doctor's a retina doctor and is doing all this Avastin, and then you're doing your own practice, you may get a lot less because they're going to build a lot more RVUs. So if you're on percentage of RVUs, that may not be a good deal for you. So you need to know what you're paying, what you're getting paid for, and how it's based on what your production is. Next. Advantage again, RVUs, you get paid on what you generate. Hospital employees, you don't have to worry if they collect, if it's based on what you bill, but make sure it's not based on what you collect. Disadvantages are if you're on RVUs and the hospital has patient outreach or your resident teaching, you're not getting paid for that because you're in your other academic pursuits. Next slide. Some examples just to give you, for example, you need to look at kind of what's going on. So if you look here and you look by your standard model, and this is our Medi-Cal for state of California, you look at 99214, which is circled, they pay $37.5 for both an E&M code and an I code, which is totally different charting. But if you go across for an RVU, you get 2 for a level 4, and a 9214 only pays 1.48. So you're much better to use an E&M code. And for reimbursement, the same. You can look at the difference now of what Medicare is in LA. So you really want to know what the payment is in the code for RVU based on how you're paid. Next slide. Again, this is just another sample. If you look at Medicare codes versus RVU at a $50 RVU, you're going to get 0 for Medicare RVU payment. If you do Medi-Cal dollars for 0 for a fraction, you get 0.38 RVUs. So if your boss or your practice is paying you by Medicare rates, you bill a refraction, you're going to get 0.38 RVUs. But if you bill for Medicare rates, you won't. And if your hospital pays you per RVU, you get $19 for that, whether they collect it or not. So next. And to maximize your reimbursement, remember, codes with higher RVUs will usually pay higher reimbursements, but not always. You need to sometimes see what the RVU is if you're being paid by RVUs. And going, example though, if you just look at, for example, RVUs, sorry, stumbling here, and you look and you did, say you did 2,000 refractions in RVUs a year, that would pay 760 more RVUs. And if it's $30 or 10% increase in your production, so you would make $60,000 more a year in a hospital if you build 2,000 RVUs, which is not unreasonable. That means only a third of your patients are doing a refraction. You'll make 60,000 more a year in RVUs. But if you're paid by Medicare dollars, you would make nothing because they pay 0. So again, knowing what you pay and what you do by RVUs is important. So finally, I have a bunch of slides in here I want you just to look at so we'll go through these. This is how you calculate the Medicare formula, real simple. The total payment amount to the group is the green amount from all those numbers there. Your amount that you're getting for what you do is the work RVU on the very top, that very left hand. And so that is the amount of RVU that you'd be getting just by doing, say, a refraction or a sensory motor or a cataract. And you can kind of look at the numbers there. Next. Sample program, if you want to calculate how much RVUs you get for a different code. Next one. For example, if you use the formula I gave you, this is what RVUs. A 99205 gets 3.5 all the way down. So if you were getting RVU salary, you'd know how much you were getting based on your RVUs. And next one, this is for OCTs and some sample codes. Next one. This is inpatient codes. Next one. This is your RVUs for your consult codes. And last one, your strabismus RVU codes. And common peds ophthalmology surgeries like a probing and irrigate. And that's it. So that gives you an idea, if you're going by RVUs, how you calculate what you're at and what you might be worth. So thank you.
Thank you, Lance, and thanks all the speakers, and thanks for everybody that attended this talk. If there's any, I think we answered all of the questions that were posted, but if there are more questions, you could certainly write them in now. And also, if anybody has any topics that they like, that they want to go into in greater depth in the future, or if there are any different topics that you'd like us to discuss in the future, please just drop a note here, and that way we know what you want going forward. Yeah, so that's great. If anybody has any questions, we're basically done for tonight, but you feel free to type them in now. The appendix slides, yes, will be on the presentation on the AAPOS website. And thank you, everybody, for attending.
Thanks so much, Darren, for organizing. It was excellent. I think we have no questions for the questions left in the chat. So hope everybody has a good night.
Thank you, everyone.
Thank you, guys.
Thank you, everybody.
Thank you, everybody.